Well, in business news, the currency wars are a hot topic in the market, especially between Japan and the U.S., and with Nigeria adopting a flexible exchange rate policy. What does this mean to the local economy and global markets? Africa 54 business correspondent Jill Malandrino in New York meets with John Carter of Simpler Options to discuss the issues.
While there's significant long-term potential for Africa in terms of expanding its industries, near-term there are some concerns because of currency fluctuations. John, explain to us how foreign currency impacts the local economy and global markets.
Sure. From a bigger perspective, the main thing to keep in mind is that if a country's currency is cheaper than their trading partners, then the exports that they're sending out are going to be more attractive. So it actually will increase exports, which also increases employment. So it's a good thing to essentially have a weak currency with your trading partners. On the other hand, if you're importing a lot of stuff, it's better to have a stronger currency or a currency that's rising against your trading partner, and then that way the imports just become cheaper.
Right. So Nigeria on Tuesday, they had made a move from going from a fixed rate to a flexible rate. Could that be good for the economy? Because there are struggles there as imports have gotten so expensive and they're exporting less because of the oil crisis.
So the good thing there, that does offer a lot of flexibility in terms of if they would like to get more exports out of the country, then if their currency continues to fall against the dollar, then that's a good thing for that. If on the other hand, the idea is like, especially if they're trying to figure out what exactly to do with it, if it's something where it's like, okay, the currency is strengthening against the dollar, that's great, because that's the opportunity to go and buy goods to import in because it's going to be cheaper against the currency.
Do you think the currency wars are heating up at this point globally?
I think that's the big economic war going on right now. Is it's a race to the bottom where you've got the big economies, whether it's Japan, and at this point now China, are deliberately devaluing their currencies, specifically against the U.S. dollar, so that they can export more to America. And the U.S. is also have been trying to figure out, well, if our dollar's too strong, then that's going to hurt our economy as well. And really, at the end of the day, every major economy out there wants a lower currency to kind of keep that going, to keep employment up. And it's a war going on right now, and it's a battle.
Okay, all right. Thank you very much, John.
Absolutely.
For the Voice of America in New York, I'm Jill Malandrino.